Now that the debt ceiling crisis has been averted and Janet Yellen can go about her day-to-day duties and meet the financial obligations of the United States, the focus has moved to the Federal Reserve, which will begin the FOMC meeting exactly 1 week from today. Because it is widely expected that the Federal Reserve will begin its first rate hike pause next week, market participants will focus upon levels of inflation rather than whether or not the Federal Reserve will raise rates. Hello, traders. Gary Wagner here. 12:08 in Honolulu, 6:08 in New York on Tuesday, 6th day of June 2023, and this is the Daily Report for Gold and Silver. Gold is trading modestly higher today, currently up $5.50 or 0.28%, with the most active August contract fixed at $1,979.80. Although we are still exactly 1 week away from the release of the next inflation report, the CPI, Consumer Price Index, next Tuesday, as well as the conclusion of the FOMC meeting the following day on Wednesday, those two events will provide critical momentum for gold. That is to say, if the CPI report shows that inflation has come down a bit but remains persistent or sticky in certain segments, and the Federal Reserve does a rate hike pause, the first one over the last 11 FOMC meetings, we could expect to see that provide bullish undertones for gold, taking them higher. In terms of the areas we want to look at, we do have a technical level of resistance. It sits at $1,980. Gold is trading just below it at $79.60, and that is based on the 38.2% fib retracement. The data set goes from $1,810 up to $2,083. Above that is both a key psychological level as well as the 50-day moving average at $2,000 per ounce. So that if in fact the Fed does not raise rates, if in fact inflation shows that it remains persistent and that the target of 2% by the Federal Reserve is not all that realistic, we could see gold once again challenge $2,000 per ounce. The dollar is fractionally higher, up 0.16%, and the dollar index is fixed at 104.100. The fact that the dollar index is currently above both its 100 and 50-day moving average is significant. It does mean that it is in a bull trend. However, as I've talked about over the last couple of weeks, I believe that that might be coming to a conclusion. We have this rounded top here. Currently, I see support at 103.60, the 78% fib retracement, with major support between 102.22 and 102.75, the 50 and 100-day moving averages. Major resistance comes in at 105.96, will round up to 106, which is the 61.8% Fibonacci retrace. Silver is also trading higher on the day, up 0.17%, with the most active July contract fixed at $23.67.5. I'm still bullish overall for silver prices under the assumption that we will see silver continue to move higher after forming a V bottom just below $23 per ounce. We saw a nice rise up to approximately $24. A small correction here. I am looking at the first level of major resistance to occur just above that at $24.25, with strong support at $22.80. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.